In this video, an SMB trader shares his newly built position sizing system to make significantly more, much more, in a technical analysis trade. Hi, I'm Mike Bellafiore, co-founder of SMB Capital, a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. In this video, we'll learn an effective technical analysis trade, how one SMB trader built a position sizing system, and an effective filter that signaled the edge in this trade.
So today I'm going to present a playbook I did on Roku. I called it the bear flag continuation. Mind you, the reason I traded this was because of a technical catalyst, which was a large time frame bear flag, but there was also a big FA catalyst behind the name. And of course it had gone parabolic leading up to my trade, which probably brought a lot of short sellers in and a lot of attention to the name. So big picture fundamentals. Basically, 2 days prior to my trade, Facebook and Comcast announced they are entering the streaming business with new products. All in all, this caused Roku to react negatively, of course, because there was an increase in competition. Basically, when Comcast announced that they were giving out the free Xfinity devices, everybody started selling Roku because they figured that if they're going to be getting this service from a different provider, basically for free, then they're probably going to sell. Then they're probably not going to be buying their Rokus as much. And this theme kind of went on with Facebook's announcement, and of course, we had Disney also announce the streaming service a while back. So there's just a lot of competition in this space right now. And also very important to mention, Pivotal Research initiated a sell with a $60 target for Roku, which was way out of line for the street. A $60 target for Roku was again just very rare. Everybody was kind of targeting around like 130, 140, 150, and they just came on with a $60 target. So some intraday fundamentals, some hard numbers for me to mention here. By 10 a.m., Roku was in the top 5 of my big mover filter. Based on my back testing, these stats indicated that Roku was likely to close at or near low of day. So I use this scanner basically when I see that a large move happened in the morning that would lead me to believe that the stock could continue that move the rest of the day, and I look for that pullback, right? RVOL 4.6, change from from today's open, 40% of an ATR, so you can see the stock's moving. Outside of the pre-market range, that was important to me. Prior day's range, outside, it's great. Average volume, 17 million shares. I can get big if I need to. ATR, 9.5, beta, 1.9. These are all great numbers for me, everything that you're seeing here. These are all part of my scanners, and they're built into my scanner. You can see here, Roku was number 3 at the time that I took the screenshot. This puts it at a really great spot for me to trade.
So Nano, tell me a little bit more about your big mover filter.
Yeah, absolutely. So what it does basically is it figures out how much of an ATR the stock has made from high of day, from the open, or from low of day. Now, the concept behind this and what we kept noticing is that at the end of the day, me and Armand, my trading partner, would look through stocks and we would notice so many stocks made a big move in the morning and then they continued that move in the afternoon. The key thing about the stocks that continued in the afternoon is that they had an exaggerated move in the morning with big opening volume, with big opening RVOL, and that continued throughout the day. That's what's important. So we have a greater than 50% ATR move. This leads me to think that we might more likely will go to 100% of the ATR intraday. And if the volume maintains through 11 a.m. and there's people still involved, this might cause it to accelerate. And so what I look for is delta RVOL there, right? So I'll look for how much of a change in RVOL do we have from, let's say, the open to 10 a.m. to 11 a.m. With stocks that move all day, the delta RVOL does not go down very much. We don't have a big change. The RVOL maintains its strength throughout the day, and that's important for stocks that are going to be in play all day and not just make one big move and whipsaw the other direction.
Do you mean by that RVOL, starts at 5 and it doesn't really go down very much from 5, that it stays at an elevated number as opposed to opening up at 10 and then going down to 3 by the end of the day?
Exactly. Yeah. So you put that in a really good way. Yeah. I'm looking for RVOL to maintain within 75% of its opening range. So, if it opens at 10, if it drops all the way down to 2 or 3, something went wrong there, right?
If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up this free registration page in the new window, so don't worry, you're not going to lose this video. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Let's talk about SPY here, because this is very important to note. SPY is trading within a 9-day range. VIX opened on this day at 13.5. And you can see here, even the Fed announcement that happened 2 days prior here didn't really move us out of this range, right? Everything was as expected and priced in for the market. And so it's so important in these type of days to not be looking at market plays, because market plays, unless you're somebody who likes to trade within a range-bound price action, you won't do so well, right? Because range expansion isn't going to happen when SPY is trading within a 9-day range and VIX is at 13.5. We need stocks with their own FA catalyst. So again, it's good to know where SPY is, but it's not going to affect our trade so much in either direction. Technical analysis for Roku on the daily here. You guys can see here, back in August, Roku gapped up on great earnings report and a guidance increase, and aggressively traded higher. We basically went parabolic, made a 75% move from the prior close before the earnings came out. So we ended up topping out at 176.5. Had obviously went crazy parabolic. Had our first day of selling, continued selling. Had a consolidation. This is the breakdown from what I was talking about in my first couple slides, which was the competition was increasing, right? And so when this news came out, we sold even harder. And the day prior to my trade, you can see we were just starting to pull back a little bit. People, especially me, were starting to think that this was the beginning of maybe a larger bounce. We were at strong support. So it was, in my head, I was thinking on this day, if it gets above this high over here, maybe I'll trade it to the long side for the bounce. But I definitely wasn't expecting what did happen, right? Which was the breakdown to the downside, because I felt that it was too oversold. I didn't think that the risk to reward ratio was there for the downside. Clearly, I was wrong about that, and my bias did hurt me here, and we'll talk about that in a sec.
Hey, so one thing that stands out, and one point that we should clarify for some of the newer guys who are in the room, is, so in of itself, if there becomes more competition in a particular sector or with a certain product, that can cause a stock to trade lower. But we had something more here, and that's that not only was there more competition injected into the sector, but there was competition injected into the sector at a cheaper price. So somebody is putting pressure on pricing as well. It's not just that there are more players, but there is another big player straining prices. And so I wonder, Nano, if that's something that we needed to pay a little bit more attention to than just there's more competition.
You bring up a good point, Mike, and I was watching CNBC and they were talking about the streaming battle, and something they mentioned is that big streaming providers like Apple, like Facebook, like Comcast, they might be able to swallow a cheap price, and they might be able to swallow the loss that might come from a cheap streaming service. But Roku is different because this is Roku's business plan, right? And so I do agree with you. If when you have big names coming in like Apple, like Disney, and they price it at $4.99 or $5.99, and Roku's sitting at let's say $8.99 or $9.99, up to $15.99, it's going to look bad for Roku. It's difficult for Roku at that point because there's bigger companies who can handle losing money, trying to win the streaming battle. And there's, Disney and Apple are far more well suited to handle losses when it comes to that type of subscriber model. Okay, so some TA here on the 30-minute time frame. You guys can see here what this selling off really looked like on the 30-minute time frame. Pretty aggressive. You can see here the prior day bounce was, really dirty. It bounced really cleanly. You think it's going to work out really well. It closes at high of day, and of course, it gaps down after this pivotal research puts out the $60 target on it. I mentioned something here that any longs from prior day bounce are likely trapped. And it's not any type of manipulation. I don't want to act as if I'm talking about any type of manipulation. What I'm talking about here is that people who bought prior day are going to have to close their longs likely because they're at a loss. Clearly, it would be really tough for you to be in profit from getting long the prior day. So I'm sure most people here are looking to sell at the open, and this is what I thought initially. And we'll talk about my game plan here in a sec. But you guys can see here, my thought process was, maybe they sell it and then we hold over here, but that wasn't the case. So here's my game plan, just on a 10-minute time frame, a little bit more zoomed in. This is exactly actually what I had the morning of. I told myself that if it pushes up into this area, watch for a gap fill reversal. Maybe maybe it's range bound, within the prior day's range. If it's powerful and if the people that bought yesterday aren't so scared by this gap down, then potentially we have a strong move up, break above 135, and it holds above, and continued bounce to the upside considering we're oversold in the 30-minute. And of course, the last scenario, which I was not confident about, was the idea that it would break below pre-market low and get short, and it would sell the rest of the day. I just thought the RR wasn't there for the downside. So with that said, let's take a look at what happened on the day of. Roku opens up. Immediately, we see the selling, which I expected. But then something very distinct happened. We had a massive increased volume as we broke pre-market low. And so what that told me there was that this move was likely not fake. The volume of selling below pre-market low and the hold below pre-market low this aggressively told me that the people that were selling were meaningfully selling. They weren't just, it wasn't just the morning volatility, right? People were actually scared of this pivotal research target. People were actually scared of the streaming more. People were clearly selling this name. So by the time it hit here, it was already hitting my scanners for really, really great numbers. As soon as we pulled back to the and this is not too necessary to talk about too much, but this is an anchored VWAP just from the morning. Actually, I wasn't considering the pre-market price action. Just something interesting to note. I just try to find an edge anywhere I can, and I have found an edge where if you anchor a VWAP to the open price rather than the pre-market volume, which sometimes can be significant, you'll get a bit of a divergence between the two VWAPs, and you can use them to your advantage to get a tighter risk-to-reward ratio. Just something interesting to note. So I shorted this exact line right here as soon as we pushed up, and I'm going to show you the tape here in a second. It was clearly getting rejected here. There were sellers stepping in. Sold down. This day level at the 120 I was thinking would definitely hold. I took off a little bit too much down here. And you guys can see here, you see this volume spike? There's massive prints going in near 120. And we held back above this low that we made, this new low of day, and we wicked back above. So I was thinking now, okay, this is setting up for an intraday reversal. I want to look for the long. Clearly I was wrong, and once we put in a lower high, which I really wish I shorted, I really missed this opportunity by thinking that this might have been an intraday reversal candle. Once we put in a lower high, I was still holding my shares, of course. Covered some more into the second leg into 120, and similar scenario again. We bought back up with massive prints here, and you can see the volume over here. Now, I think my issue here is I was reading a little bit too much into what was going on the lower time frames, and quite frankly, still lower highs and lower lows. So, I stuck with my strategy even though I thought this was going to be an intraday reversal. At this point, I was only holding a quarter of my size as we broke down. And this is when I started getting worried. I was thinking, dang, I really probably should have just stuck to my plan, which was, stick to my stop up here and add on any pops that fail. And so when I saw this last lower high put in, I covered into the flush. I missed this opportunity to resize up my trade into some serious size. But once we broke down from here, my bias was gone. At this point, I was thinking, that's it. I'm getting short the name. Below 120, it does not make sense to even think of the long. And then you can see the next slide here. I was just shorting every pop into EMAs. And I traded it well the rest of the day. But this was very stressful for me. And I wish I handled this morning better, because if I sized in here, this was my best opportunity to get short the name with a big core position. So a little bit bummed how I took so much off over here and forced myself to retrade it at these spots.
You do such a great job of developing your big mover filter. And you do such a great job of helping inform your focus on trading this. And so when you think about and you go and you do the back test, and the back test is telling you, hey, that this is likely to close at or near the low of the day. And so that is a lot of really great work. And I would encourage you to do more of that. That's really terrific work. And everybody in the room, if you take away one thing from this first half of this discussion, it's that. How do I do work like that? And then the thing that I would say to you, Nano, is, and look, I understand the indecision, and I understand the thought, hey, maybe this is overdone, and hey, maybe there's a bounce opportunity, because we're active traders and we're competitive, and we want to catch lots of things. But your filter is telling you that this is likely to close at or near low of the day. And so I'm not in any way suggesting to you that there should never be a time when your big mover filter strikes that you should never trade for a bounce. But what I am saying to you is, just like you're being so clear, just like you're being armed with information from this filter, you should think about being systematic in what are the exceptions to when I'm going to think about playing for a bounce when something strikes on my big mover filter, which tells me low of day or likely to close at the low. What are the one or two times I'm going to override that filter and I'm going to play for a bounce for me? And you want to think about that beforehand. And what happens when you don't is that you confuse yourself. So you're looking at the price action that's going on, and you forget the big picture for you for this trade, which is you have an edge both in technicals and in your back testing. And you're overriding that based on short-term price action. I'm only going to do that in scenario A and scenario B, and I'm going to write that down and be systematic about that, or else I'm going to stick to the short. I'm going to stick to what my filter that I've back tested in the calm of day has told me. And so, lots of times people think this is an issue of jitteriness or psychology. I think it's an issue of more experience and more preparation. You need to take it a step further, which is you prepare to trade this on the short side. Now you need to prepare to the few times when you're going to override your filter for a bounce, and if those scenarios are not there, then you're going to stick with the short, which would have helped here.
And looking back at this trade, in hindsight, I can see now the potential of what this scanner can produce. I've seen it happen tons of times where the scanner tells me low of day, high of day, and it's accurate, but this move was unprecedented. We had a massive move in Roku. So, the fact that the filter is going to catch these types of move in the future, I need to be prepared to trust the filter and stick with that core position, especially when the numbers are so good on the filter. These were unique numbers. This wasn't just any other day, any other type of numbers on the filter. When I was taking this screenshot, 134% of the ATR had been moved already from yesterday's close price, and most of this was happening intraday. This was these were big numbers, and I think that really should have screamed something to me. Let me actually show you guys where I'm showing you this exact entry. I had multiple entries in the name, but this entry I felt had the most interesting tape. You guys will see I get short at 123.25, stop above 0.65, which was the high of this candle right here. I trade with very tight stops. Using the tape, I ensure that my position can be as big as possible for the tight stop that I'm putting in. So what you guys are going to see here basically is, and what I want you to watch is what happens when it reclaims 123. It's almost like this move up happens, and if you don't mind, this move up happens on the tape, and you guys will see it happen. And it looks so trappy in a sense because of how powerful the tape looks to the upside. But watch how quickly it reverses. So you can see it's accelerating now into the upside. This is into VWAP, by the way. So with these big prints, I had filled short, by the way. And immediately you can start seeing we come off of 123 and start smacking down very quickly. This is just textbook right here. The price starts price starts moving in an accelerated manner to the downside. You start seeing these massive orders fill, and then you can note that all these massive orders are filling above the price that we're trading at. We quickly trade below these prices. And again, you can see it. What you just watched there was the push up into this candle and the move back down. And so, again, what this tape told me basically is that there was people watching where I was watching. There was a lot of orders filling where I was. There was a lot of momentum in the tape. The trades per second, the prints per second had increased a ton up there. In those moments, especially when the stock is pushing into resistance and it starts selling, a lot of people who were buying into that, what they thought maybe was a breakout, or what they thought was going to be potentially a higher high, they have to hit out too. And you see that happening because everybody is getting into this name right now. And the tape shows that. Position sizing, let's talk about it. Because this was a big problem for me here. I didn't take nearly enough size on this trade. I was only in this trade 10% of my, or 20% of my daily stop is what I was using for this trade. My current sizing system forces me to make a decision on how much of my daily stop I would like to risk in real time. This oftentimes leads me to make a bad decision because I'm too focused on my trade to worry about how much I am willing to lose. I end up sizing conservatively even though I have a great RR setup. And this is just an example of this type of scenario. I have a 40-cent stop on this trade. It's telling me to take 250 shares for each $100 of risk. But a big issue that I have personally, being a new SMB trader, is that I find myself in positions where I'm not sure that how much of my daily risk I want to use. And I see that it's a great setup, and I feel confident about it, but I think of, let's say, losing 20% of my daily stop or 30%, and then I just start getting nervous and I start getting timid, which is not the trader that I want to be or the trader that I am. I don't like to trade in a timid manner. I'm very confident when I trade. So what I've done, and I've been using it this week so far, is I've implemented a new system that allows me to determine how much of my daily risk I should use based on the time frame, based on some past winners that have had certain factors playing into my win or my loss. And I will go over those right now, actually. So, if a stock is near an important technical level, that, whether it's VWAP, whether it's a long-term level, I will add a daily risk, some percent of my daily risk to the trade, depending on what time frame, of course, I'm using. Higher time frame leads more daily risk because on the higher time frames, I get more confident setups. I get a higher win rate. If the stock is going in the direction of the trend, so Roku, it was selling in the morning. I was going short. I shouldn't have been nervous. I should have added, let's say, 10% of my daily risk because I was with the direction of the trend. Yes, RVOL was elevated, so I should add some more daily risk to that. Direction of FA event. There's competition increasing in Roku. This matters to me because this means people are looking to sell the name. I want to add more daily risk for that because if it's selling in the direction of the FA event, I have a good reason to be in the name in that direction, not just a technical reason. Top of scanners. This is something that I've back-tested extensively, and while I haven't had years of experience using the scanner, which I think is what caused me to lack confidence sometimes, I have years of back-testing data. And the back-testing data has told me that my scanners are right, and that's why I'm using them on an intraday basis. So, if a name is on the top of the scanners, I need to be putting in more of my daily risk towards that trade. And a perfect trade will have all these in its checkboxes. And in a perfect scenario, I'm using 40% of my daily stop because I'm very selective with my trades, or at least I'd like to be very selective with my trades. So I want to use more daily risk, less trades, more selectiveness, and I want all the check marks to check off for me to put up that much size.
So you should have risked on this trade how much of your daily loss?
I should have risked minimum 35 to 40%, and I think I personally would have been comfortable losing up to 60% of my daily stop on the name. This met all the criteria. This was a unique scenario. Not every day you get a name like this. I didn't take advantage of it the right way, honestly.
Yeah, and a lot of times people look at risk only as how much you can lose. But when you're thinking about risk, you also have to think about how much you can make. There's a lot of risk. In fact, in our best trades, there's more risk, not putting on enough risk. And so when you're identifying the trades that you really like, you got to get to the point where you're putting on enough risk. And if it doesn't work out, that's fine. You see something that you really like, this is something that you have some back testing to support yourself, go for it. Put on the risk, and we have your back on that.
I want to get better at that, I do. And this week, even the market has been very slow, and I've had to force myself to take the mentality of be even more selective. And very clearly, a lot of the names this week are not meeting this criteria, and I haven't been putting on the risk, but I want to, and I will when I see the opportunity. And I really want to make sure that you grill me if next time I don't do that. I want to be embarrassed if I don't do it, because that's wrong. That doesn't make me a better trader. What's going to make me a better trader is putting myself in an uncomfortable position when I know I'm confident.
Yeah, and so one of the things that traders do who are working on sizing is they grade themselves on whether or not they put on enough size for their A+ trades. So they delineate their A+ trades, and then they write down how many A+ trades they had during the day, and they write down whether or not they've actually put on the amount of risk that they're supposed to in these A+ trades when they visit.
And I think that's something I'm going to have to start doing in my trader view, is grading how much size I'm putting in each trade rather than just how I manage the trade. Managing a trade was obviously a big part of my trading career of figuring out how to manage a trade properly, and I still have a lot of improvements to make there, but my sizing is far more behind than my trade management is. I have a system for that already. My sizing system, I'm just now working on a far better one than I had before.
Okay, good. And that's the biggest takeaway from this trade is, hey, we underperformed. We made some money, but we underperformed to our ambition. Now we're going to put a solution in place so that next time when we see something like this, we're going to trade it better. That's the work that we do. All right, really good job. I'll say again, for the guys in the room, I love the big mover filter. So that's a lot of the work that will be that you guys will be working on when you start to go live. Okay, now it's your turn. Which effective trading technique from this video will you try next? Are you going to build a filter to spot one of your favorite technical trades, or develop a position sizing system for your A+ technical trades? Let us know by leaving a comment below right now.